CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Well, as we put the spotlight and unpack details about the crypto space, we today are joined by Leah Wald, our CEO of Soul Strategies. Leah, hi, thank you so much for joining in. While 2025 has been a great year, we've seen progression really in NFTs and DeFi and tokenization, and of course, the crypto price is also. How are you specifically looking at the DeFi as a space, the kind of projects that this space seems to be getting into with more partners and more projects coming in? Where do you see this market heading?
I believe that DeFi projects were always way too risky in the past. They were misunderstood, and everybody really gravitated there just for juicing that extra yield. And sometimes it was better for the asset managers or more conservative investors to stay away from DeFi entirely. Now, it's a completely different game. You have the largest institutional investors and nation states in the world actually integrating with DeFi. I think that one example that we could point to is tokenization and the tokenization of real world assets actually being integrated with with DeFi, which is just remarkable. As one example, Apollo. Their tokenized credit fund crossed 100 million in 6 months, and that offered 11% returns. They were also using DeFi integrations, and DeFi can yield up to 16%. Institutional giants like Coinbase and Kraken were early investors there. You also have Franklin Templeton's innovations. So their Benji platform operates on 8 blockchains with over 780 million in assets, and that even expanded to VeChain. So what they're really looking for there is, again, using blockchains that have that native yield in order to, again, have a higher return. Now let's go to the big kahuna, right? BUIDL. So BlackRock launched the BUIDL fund, and it's now accepted as collateral on crypto.com, on Deribit. I mean, it's a massive multi-billion-dollar fund. This creates yield boosting opportunities that, again, can push returns from 11 to 16%. So the tokenization premium is real. You also see just generally that projection increasing. Boston Consulting Group projected 16 trillion in tokenized assets by 2030. We're at 26 billion today, so that's a 600x opportunity. So I'd say this isn't about crypto going mainstream. It's about mainstream finance being rebuilt on blockchain rails. And the opportunity to utilize DeFi makes that even bigger of an opportunity. So really an infrastructure replacement, not speculation at this point.
Leah, Solana has been known for its speed and low fees, scalability, real utility as well. But going forward, are you looking at more and more competition coming in? And how is Solana looking to tackle that?
Solana, the way we see it and the way the market sees it, you have a very high performance blockchain designed for speed, scalability, capable of processing thousands of transactions per second with effectively near zero fees. So we see that as making it superior to the slower, more congested networks, i.e. Ethereum, which can take 12 seconds, right? So there's definitely competitors to Solana, but we do think that it's going to be the winner in the end of the day for financial rails. And that's why you're seeing a proliferation of, again, those tokenized asset projects, even on Solana. So definitely a lot of opportunities out there. There's other large companies like Coinbase who are betting on other blockchains like Base, but we're definitely betting on Solana here.
Leah, there was a very interesting report from Bernstein saying that the crypto bull market will extend into 2027, with Bitcoin reaching levels like $150,000 and $200,000 as well in the next year, and the upside broadening not just to Bitcoin, but to Ether, Solana, and DeFi. What is your own sense?
I used to always be cheeky and say 1 Bitcoin equaled 1 Bitcoin, but I'll stop doing that now that there's a little more fundamentals behind it. You're absolutely right. There's a lot of pie in the sky, price predictions out there, but there's also just some of the smartest investors in the world, like Cathie Wood and others, and the way that Larry Fink speaks about Bitcoin and other potentials that are astronomically high, and yet backed up by their own projection models that are very strong. I mean, I've heard $1 million per Bitcoin by 2030 thrown out there. You're seeing 124,000. Who could have believed that only a few years ago? I mean, even after FTX, we had black eyes. You know, in the United States, a lot of us working in the crypto industry were debanked. But now you just have everybody that's supportive and actually making this industry work and making it available for the largest asset managers in the world, like Bitcoin, like BlackRock, to actually jump in. So I'm very bullish. From the projections that I've seen of research analysts that I really respect, I wouldn't be surprised if we did reach 175,000 by the end of the year. Now, that's even a low estimate compared to some of the analysts and investment managers that I've seen, but I can see it happening.
All right. 175,000 for Bitcoin by the end of this year. And well, people have been talking about $1 million as well. We'll come to that later, Leah. But it's not just about the prices, right? The mining, the hash rates, the NFTs, the ETFs, and a couple of Solana ETFs as well are doing quite well. What is next now to watch for crypto enthusiasts?
You nailed it on the ETFs, at least because that's my old world. You now have, as mentioned, a couple Solana ETFs in the market. I'm going to go US cap market specific here, but we can speak about global cap markets and their advances on the Solana ETFs as well. I'm going to speak about Solana for a second, and then I'll go back to other altcoins. But at least for Solana, I think it's important because it's a synecdoche of other altcoins being accepted. So you did have the acceptance, which was a 1940 Act product by REC shares of a stake SOL ETF. Now that is not a spot product, so it's a bit different, but we have had advances on the spot products as well for in-kind creations. Why does this matter? This does matter so much because the accumulation that product has already seen by REC shares is enormous and just shows the growing demand for other altcoin ETFs. So as of right now, having Bitcoin, having ETH, all the derivatives based around that, also the leveraged, inverse, etc., Bitcoin miners in the United States, it's just shown all that demand that has just jumped into the race. And it's just showing that there's going to be more demand when other spot products and other alternative currencies are actually accepted and approved by the SEC. You've seen also successful trading of different altcoins all around the world for many years now. And even in Singapore, you saw DBS custodying most cryptocurrencies back in, I believe it was 2020, early 2020. So I think that, to your point, you're going to see just all the major advances. I think you're going to continue to see nation states accumulating, potentially more nation states making Bitcoin legal tender, similar to how El Salvador did. And I think that in nations that really care about, and capital markets that care about ETFs, you're going to see more of those products come out. That matters, just as a note for the viewers, because most allocators in the United States can only buy within the ETF wrapper. They cannot buy through spot products. So that really is the gatekeeper for having those allocations in a meaningful way. That's why you saw so much into these ETFs, as well as these armies on the ground of wholesalers of these ETFs just going out and educating everybody about them. So that is a very serious way to provide a catalyst and formal push for adoption, even into the cryptocurrency itself, by having very smart sales folks from BlackRock, Bitwise, etc., just educating people about why they matter, whether it's buying spot or whether it's buying through an ETF wrapper. So I think those are the major things we're keeping our eyes on.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.